is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. This segment is sponsored by the Equity Management Academy. Wealth creation through education. What I would like to do on this segment is focus on a report that was published just a couple of days ago for the silver market, a special trade alert in silver. This report was published in March 20th, 2014, and it basically covers the silver weekly charts, and it includes the analysis that basically we use and the algorithms that we use to identify the direction of the market. And on this report, published on March the 20th, the May silver futures contract closed at 1673. The market closing below the 9-day moving average of 1677 was confirmation that the weekly trend momentum was a little bit bearish still, but it also told you that a close above the 9-day moving average of 1677, it would negate this bearish trend to neutral. And closing above, it would activate the uptrend. We'll take a look in a minute and see where we are currently in relation to this signal after we review the balance of this report. So moving forward, you knew that 1677 was basically a trigger point that if it closed above it, it would activate the uptrend on a daily basis. With the same logic of the algorithm that as the price reaches the basically the code that it activates and you set up in a close above it, in this case a close above it on a daily basis during the week would activate the uptrend. The close above it on a weekly basis would activate the longer term or the intermediate to longer term uptrend. With the market closing above the VC weekly algorithm that we use, the VC weekly price momentum indicator of 1632, it confirms that the price momentum is bullish. And a close below it, it would negate and trigger the weekly stops and negate the bullish signal to neutral. So you know where you put your stop, you're long on the market, and basically your stop is at 1632. If it closes below 1632, it's telling you that the trend would be negated, the bullish trend would be negated, and stops would be activated. With a potential move down into the buy one and buy two levels on the weekly basis, which is 1576 to 1480, and it's recommending for you to take profits if you're short at those levels and go long on a weekly reversal stop. And if you go long at these levels and you get triggered at 1576, then you use the 1480 as a stop. So it identifies for you basically the buy one of 1576 and the buy two level of 1480 on a weekly basis. And if you get activated, use the 1480 as your weekly stop, close only, good till cancel order. And if you get activated at 1576, it's telling you basically that you have some targets on the upside. The first target would be 1632, and closing above 1632, your 1729 to 1785 area or levels are recommended to take profits on your long positions. What you see here on this chart above is basically a combination of different indicators that we use, essentially that we use on a proprietary basis. The line balance produces for us basically the target with the highest probability, and in this case the line of balance levels here that you're looking at indicate an 80% probability that silver will go up to about 2180 to the 22 areas, which is the target zones that we're looking at here using line balance analysis. And even though the flow is down, as you can see, coming down here from the high that we made back in the middle of sometime in the middle of around January the 22nd, I believe, the flow is down, but we are getting into major level of support, and you can see here that the market has rejected this level of support, and it basically has turned around from here above some of these trend line resistance levels and are providing for us ideal buying opportunities on any corrections into these levels that we're using to enter buying the long side of the market. And you can see here basically we've identified as well the resistance levels of 1680. We're trading above it. 1768 is the next major level of resistance, and closing above this level of resistance, then we're looking at about 1857 before we break out into the target zone, which is about 2180 to 22. So we feel very strongly that the silver market is poised to test the upper end of this level of 22, and we are suggesting our clients basically to accumulate positions in the silver market, futures, options, derivatives that are related to the silver market, as we feel the most profit potential just based on the price suppression that we've had, or I should say manipulation that we've had in allowing the market to find its real value. I think the volatility could be explosive as we break out of this compressed level of energy that we're looking at. If we do get up to that 22 level, what we'll have here, as you can see, is potentially a major long-term double bottom, which is only going to support the analysis that we have provided going back to December, where we feel that we have identified the beginning of the next secular bull market in gold and silver. And this correction here that we have is simply a short-term correction that is basically announcing or identifying and completing the testing of the previous lows that we made back in January and found some tremendous demand just underneath the market. We feel very strongly that this demand will continue to develop and unfold as we begin to see prices move up into the 18 handle. We're trading at 17 right now, and it is projecting now the 18 handle. Let's take a look at the current silver position and see if we can identify basically what has transpired here over the last few days since the report was published. Before I get into the daily chart, what I would like to show you here is basically the analysis that we have done in using the Fibonacci retracements as well as the Fibonacci fan trend lines that identifies for us the target zones on the upper side of the market and where the resistance levels should come in. And what we see here is that the market on the weekly chart is approaching the 23.6% Fibonacci retracement that puts the silver market at about 1905. The first level of resistance trend line is in the 1997 area, 20. Closing above it basically activates the 38.2% retracement, which is the 2215, and right above it is the trend line resistance Fend line that points to about 2285, 23 resistance. Breaking above that and closing above that, we basically activate the 2467 level of resistance, and right above it you're looking at basically the trend line resistance level that points to that 2550 level. Breaking above basically the 2466 to 25, I think we could be activating a move up towards that golden ratio target zone, which is the 27.17%, 27.17 dollars per ounce. And if we can challenge the 78.6% retracement, you're looking at about $30-31 for the silver market. Needless to say, if we do break above this new high that was made at $35, then we're looking at a target of about $48 for the silver market, which I believe we will see taking place over the next 2 to 3 years, if not sooner. I think what we're looking at is the beginning building process of this long-term bottom that seems to be building in the price of silver and the gold market. Let's take a look at the daily signals a little more closely and identify the daily prices where we could be headed for over the short term. And obviously you see the target here, the Fibonacci target of 23.6% retracement seems to be a highly probable target that we'll see here in the very near future. We are into a little bit of an oversold condition here, as you can see from the RSI that we use, that indicates the prices to be a little bit overbought. You know, at this point, you want to, if you are long and you've been following us in accumulating longs down here, obviously you want to trail the market with a stop or put your objectives in place. And for that, we're going to take a look at the weekly, the daily algorithms that we use to identify the daily prices of support and resistance for the silver market. What you're looking at here basically is the daily target zones that we use, or the daily algorithms that we use to trade in the live trading room, and produce the kinds of results that we'll go over a little later on and show you how we've been able to do that. But if you're looking at the signal here on the 20th, it indicated the market came down into a good level of support. It bounced from here, and once the market activates the signal, it projects right away the upper end of the codes as the target zones, which are the sell 1 and sell 2 levels, basically as levels that will offer some supply possibly, or that we could see some profit taking come in. So we met the first target of 1708 here this week. If you had multiple positions, obviously this would be a level where you would take some profits, as we have, and leave the balance to take them out if you're swing trading the market at 1717. If you're positioning trading the market, use any correction to position yourself for the long haul. Use any correction into these levels here. Ideally, when we get the RSI into the 30 or 20 area, is a great value to add to your long-term positions. If you're swing trading, you're looking at the targets being met targets that were published last week, and basically targets that we are accomplishing on a weekly basis. What I would like to do at this point is simply review with you the process that we go through once we activate trades in the room, and we audit the trades, we post the trades. We use EMA2TradeLiveSignals.com as the master website that basically shows the trades that we do in the room. And here you can see all the monthly percentages that we run. And for this year, we are up so far 71%, showing not only day trading profits in the markets that we trade in the room. 17% for March, 48% for February, and January 6%. When we activate a live signal in the room, we basically are very transparent in everything that we do, and we show the statements, we show the tickets that we basically do to execute the trade. And once the trade is posted here, you can review. For example, if you click on the right in swing trading, you can review all the swing trading signals that have been produced since we started trading, basically the swing trading program. And not only do you see the actual tickets that are dated and match the statements on the platform that we use, you can actually see the flow of the results of the trades. And we should be coming up here. We should be coming up in a minute here. Bear with me 1 second. What you see here is the swing trading program that you can click on this link here, and this will take you to the monthly results in the program. And as you can see here, in January, we produced about $14,880 by trading on an average of about 1 to 2 contracts, mostly and mainly 1 contracts. The program, we've been trading it for 3 years using 1 contract, and we actually recalibrated the program to do multiples, and our profits have gone through the roof since we did that. In February, we produced $22,600. March so far, we're up $4,800 in swing trading. The metals link is basically the day trading signals that we execute in gold and silver. And in silver, once again, you can see that we made $300 in January. February, we made about $34.85, and you can see the equity curve is pretty impressive. In March, we are up so far about $2,475. So we document pretty much everything that we do in relation to the actual day trades. Like here, for example, in the gold market, in January we produced $5,800, February $3,710, and in March $4,280. These are actually real trades that I do in the room, and if you are following these trades, then you should be in a position for you to benefit on an equal basis. In fact, depending on your personal situation and your personal financial condition, you can really benefit by this exponentially based on your personal situation. So what we have seen here is a methodology that we use on a daily basis to identify for us signals that we can day trade as well as we can swing trade successfully by using the VC price momentum indicator. If you have any questions, you can please send them directly to support@ema2trade.com, or you can reach us if you go to our website and contact us. You can send us an email, or you can use the telephone toll-free number and direct line, as well as the email address to contact us. This is Patrick MontesDeOca, my friends. Once again, thank you for the opportunity to share this information with you. And I look forward until next time. In the meantime, be safe, be well, and good trading.